Ahoy there, trader, and welcome back. This is the Anti-Investor Swing Trading Podcast, and let's talk about how long bear markets last and when might we be coming out of this bear market. Now, bear markets can often be scary for investors, and it raises a lot of questions. Are we in a bear market? How long would it last? Is moving into cash a good idea? When is a good time to move to cash? When is a good time to get back into the markets? And 100 different iterations and variations of the same or similar question. Now, this is certainly where swing trading has an advantage over investing, as we aim to profit from both upswings and downswings in the financial markets using a simple rule-based process. I refer to mine as a production line trading process. Now, putting that aside for a moment, let's take a shallow dive into the world of bear markets and explore how long they typically last. Hi, it's Phil. Welcome to the Anti-Investor Swing Trading Podcast, where we talk about swing trading stocks, stock options, and index futures. My goal is to help the next 1,000 traders become financially independent and retire early from the financial markets by providing the right tools to use, the rules to follow, and the software to assist you so that you don't make the same mistakes that I made. And from now on, I'll be your personal swing trading mentor to show you the way. So if you're ready, let's do this. Now, bear markets are, in an ironic twist, one of the things that investors are waiting for to really capitalize on their investing strategy. And as the quite often quoted Warren Buffett has said, buy good companies when they are offered at a discount. And yet when that multi-decade discount, aka the bear market, comes around, the novice investor suddenly goes into hibernation. Now, the average bear market lasts around 15 months. And we're nearly 12 months into this bear market, according to some people. Now, for the denialists, we're not even there yet, depending on how you measure such things. Now, from the charts point of view, which is my focus, we have been off the highs. We need to be off the highs by around 20%, well, exactly 20%. Now, the market's peaked on the 4th of January 2022 and pushed below the 200 period moving average in late January, which for me is the first bear move warning shot. 139 days later after the peak, the 20% level was first dinged, and that was on the 20th of May 2022. Now, more accurately, it reached down 20.59% as measured on the S&P Futures Continuous Futures Contract, which is normally where I view the markets. And it remained under the 200 period moving average since mid-April. Now, as you can gather, there's a smudge of confusion over when the bear market started to growl. Now, there have been 10 bear markets since 1950 that were greater or in excess of 20% down, and there's 7 of those. There have been 7 which were in excess of 30% or more. Now, based on the historical averages, we are around 3 or so months away from bottoming out, or there is potential for several more months to go. Again, depending on how and when you measure such things. I'm going to go off the charts, so that's what I'm looking at. Now, for myself, I'm assessing the 2001-2002 bear markets to help me compare and contrast what's happening now with one of the more recent bear markets, and maybe we can evaluate and assess the recovery that may yet unfold. And so far, the current price behavior that we're watching unfold in real time right now is, and by comparison, has unfolded in a very similar way. Now, don't mistake what I'm saying for bad news. We are in a bear market. It is difficult times for lots of different reasons for a variety of different people. But bull markets are built on the shoulders of bear markets. And the longer this bear market bottom and base takes to develop, then potentially the bigger the bull market boom we will see. Again, looking at history again, the average return when a bull market starts to charge over the following 3 years has been around 41% and over 71% for the following 5 years. So this is a great time to start swing trading and also investing with a longer term time horizon, should that be what you're looking for. Now, just popping my tinfoil helmet statistic on for a moment, 100% of the time since the 1950s, there has been a market rally after the midterm elections, which we're coming up to right now. 11th of November is the current date that I have on my calendar. And if you're listening to this, this is, again, the year's 2022. So some folks are predicting what we're looking at right now as the bottom, or we're close to the bottom, and the subsequent bull boom will resume into the end of the year. Now, history does suggest a rally, but I'm not going to pin my entire livelihood on a sudden economic recovery in the short space of time that we have now, as I'm recording this in October, to the end of the year. Now, the lessons that I've learned many times from trying to trade my opinion in the markets, I've lost counts of the number of times. It's always expensive. These days, though, I am happy to play the let's guess game with matchsticks just for fun. Answers on the back of a postcard. Because it's an opinion, it's just that. I want to base my decisions off data, so I will continue to follow my rule-based trading system, which is time-tested and proven through multiple bull and bear market movements. Using a portfolio of stocks and timeframes and markets, it won't matter what my viewpoint is. When the price moves, the strategy will tell me what to do next, and I will take the appropriate action, because I've spent the last 28 years rule defining all my decisions so that I don't have to guess what's going to happen next. And this gives me and all my traders a huge peace of mind way of trading. Now the point is we don't have to second guess what's going on, because we already know what to do when we're doing it and how to profit from swings by capturing the main swing of the day or the week or the month. Can you say the same? That you don't mind or care what the markets are doing, bull markets or bear markets? Gives you pause for thought. Now I'm getting together with a small group of traders this week to talk about finding the best opportunities right now, either in upswings or downswings. We are agnostic to the movements. If it sets up bullish, we'll go bullish. If it sets up bearish, we'll be bearish. If you'd like to join us, then click the link in the description or visit the website antivestor.com, which is my website. And that's all for today. Thank you for giving me your time and attention and making me a part of your regular routine. So until next time, toodaloo trader. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Antivestor provides educational information and does not provide financial advice.